Let's bring on board our guests for today. We have Feroze Azeez joining in with us. Feroze, good afternoon and thank you so much for joining us. Feroze, I want to start by talking about the consumption versus CapEx funds. How have they performed? You've given some data points on that front as well. Past performance in terms of AUM growth, and now what are we watching out for here in both these stories? Afternoon.
Good afternoon, Winnie. Like you were actually throwing up very, very interesting pieces of information and data. I just want to take a step back and explain to the viewer what is consumption. What happens is, I was over the weekend hearing a couple of oncologists talk to each other, and it sounded so much like Greek and Latin that I got intimidated. So let me first break it down into consumption. What is consumption and what constitutes consumption as a theme? Because it's second nature for us in the industry, but for an outsider, it looks a little more intimidating. So consumption is any kind of a sector which directly supplies to households or individuals. B2C businesses are largely consumption. There, if you have to actually narrow it down to subsectors, 6 subsectors: FMCG, auto, apparels, telecom, travel and tourism, and healthcare. These are the 6 subsectors one has to remember, because all of them actually are directly supplying their goods or services to a consumer, end consumer, and those are not B2B businesses. For example, IT is largely B2B, a business supplying to another business in India or globally. So that's consumption, and 6 subsectors constitute consumption. Now coming to how the AUM of these consumption funds have moved, it has not moved dramatically. Of course, in percentage terms, it has moved reasonably because from 11,000 crores post-COVID in FY21 to where we are at 35,000 crores, that's almost 3 times. And I think the number of schemes have definitely more than doubled from 13 to 27. That's a large shift. What is happening is, in the asset management industry, in 2018, SEBI clamped down on the number of schemes an asset management company can have in several categories. It cannot have 2 large cap funds, it can't have 2 mid cap, but this thematic category, you can make anything a theme, right? A theme of MNC companies, theme of 4 sectors could combine to make themes. So what asset management companies started doing is looking for themes to expand their product bouquet, which is the right thing to do from their perspective. But consumption, number of funds went up from 13 to 27 because the rest of the conventional sector categories had a limitation of launching new NFOs. And I think consumption, the good part, Vinny, is consumption has still not rallied. Like the performances you showed, that's very interesting. Generally, when consumption, a theme becomes popular, the performance is behind us. That's the unique thing on the timing of the show. I really respect that, because it's not that the performance is stupendous and then we are saying consumption is a good theme to look at.
Feroze, would you like to comment on that front, right? What if someone is actually holding some CapEx funds? Is it time maybe to redeem that and invest that money coming into consumption funds? Is that a story that one should watch out for? And are there any other economic indicators that one should keep an eye out on as a mutual fund investor to, maybe participate in this theme?
Capital expenditure or CapEx, capital expansion also. What is it? It's nothing but any sector which benefits from large-scale investments, in which there are 3 things. One is manufacturing, infrastructure, and maybe some degree of energy. So these are capital expansion beneficiaries in terms of subsectors. In energy, you have so many other sectors, subsectors. So to get to your point, whether if somebody is holding a CapEx theme as a fund, does he need to move out? To my mind, the answer is no. Not so much. The shift of capital from CapEx to consumption is not apparent to naked eye. If you look at the top 10 stocks in both these sectors, both these themes largely, in NSE 500, there are about 6 stocks in consumption where FIIs have sold out of the 10. Domestic institutions have gone lighter in 3 out of the 10, like especially the auto. So point I'm trying to get to is, there's the flight of capital between these 2 sectors has not been so apparent over the last couple of quarters. Now in the capital goods or capital expansion theme, if you look at the top 10 stocks, the number of stocks which FIIs reduced their ownership in terms of free float ownership, you again see 6 stocks where they have actually gone lighter. And DIIs have also gone lighter in 4 out of the 10 stocks. So the flight of capital is still not apparent to naked eye. So if you're sitting on a capex theme fund, that implies, like you, Vinny, rightly pointed out, they've not made money last year. So will I wait for the turnaround? The answer is yes. Capital formation happens from three sources. One is household capital formation, private corporate capital formation, and public sector corporate formation, capital formation. The public sector capital formation has seen a 12% capital expenditure from government side in budgets 4 years back to 22% today. But in the private corporate side, there was 5.5 lakh trillion rupees of capital formation that came down to 4.97 lakhs. So that's one thing which should revive because of several counts. One is GST rationalization. The other is the rate cut, which we've been waiting for 2 years, and finally it came in this calendar year. You also see a lot of new credit offtake. There is so much financialization happening, like Tarun Saab also said. That's the third thing. And the fourth, household consumption will also get a push because of the new tax regime. So to answer your pointed questions, don't panic if you have a capex theme. It might not be the largest, strongest narrative. Play the contra play. You've not lost too much or made too much last 1 year. You've almost done as much as Nifty. But I would not panic because capital expansion will happen in the private side, and that will take forward the capital formation over the next couple of years.
Got it. So we are out of time, but I have to ask you this question because it helps the retail investors as well. Feroze, let me start with you. Which mutual fund categories or schemes are set to benefit the most? And do you see a sustainable outperformance for consumption funds from here on?
So, I'm sorry, but I would definitely want to comment on the asset allocation. I think India has only 6.7% of its money at household level, 940 lakh crores, only 6.7% is in equity, both mutual funds and direct equity. If asset allocation, we recommend 60, 70, 80% for long-term monies, India is nowhere close to that. So if you're not in equity, up to 70% for 5-year plus monies, which is very likely because we are talking to Indian viewers, please move your 70, 80% of your money to equity. Do it lump sum is my one thing which I disagree. Of course, asset allocation is very, very crucial. That's what I agree with Tarun. One thing is do lump sum because you've got a 1 year time correction, you've got a 6% price correction, you've got 11% earnings growth, and the stock Nifty is down 11 almost about 8% now from the peaks of last September. So you don't get too lucky. You get a 1 year time correction, do lump sum as long as you can tolerate 10-12% of market falls, which is what is the second age of the market. Coming to consumption, I think if there is a fund manager who's sharp in the consumption cycle, which is reasonably certain over the next 3 years, I wouldn't be surprised the Nifty consumption index beating Nifty by about 3 to 4% per annum for the next 3 years. If you're getting into this sector, be patient. It's just because you buy it, it will not start moving from tomorrow. So if you're ready to go into a sectorial or a thematic scheme, at least hold it for 3 years, especially if it's a theme and not a specific sector. And consumption is a very wide theme. Get a sharp fund manager so that he can move it around. Inside consumption, I had rattled out 6 different subsectors. So that's what I would give as a sharp reco to your viewers.
Okay, all right. Feroze, always a pleasure speaking with you. This time it was an interesting topic because we've been seeing that move. And as Feroze mentioned, usually the stocks run up and after that we see all the craze. But this time, this is not something that has happened. So we'll watch out for the moves that we'll see in this particular space as well. But with that, we are completely out of time on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade.